Good afternoon, this is Scotty from the Gifford Group, and today I just wanted to show you a quick little video about the mortgage calculator we built on our website. It kind of shows you not only what your mortgage payment will be, but also breaks down how much money you will need to make to be able to afford that mortgage. So let's go check it out. So if you go to our website, thegiffordgroup.net, and you go to our home resources and you go on to mortgage calculator. So the very first thing, it's going to pull up, this mortgage calculator, and I can just scroll down here a little bit to show you. So once you are ready to actually apply, you can click this button. It'll take you to a pop-up window where you can actually apply with me, and we can talk about actually getting you qualified for a mortgage. But let's just run through a scenario today. So it pretty much has everything you need in here for you to be able to kind of guesstimate how much your mortgage payment would be. Those different factors can vary. So let's start with a 30-year mortgage. Most people are going to be shopping for a 30-year mortgage. Rates right now have crept up a little bit at the recording of this at the beginning, mid-February. We're about 6.75 might be a good guesstimate, maybe 6.5. You can put in your yearly taxes. In Houston, taxes are fairly high. The average taxes run from like 1.8 to like 3.5. So obviously those are going to vary about how much the home is worth, but you just need to take what do you think the taxes are there, and you can just adjust those as you see fit. The whole time that'll be affecting how much your mortgage payment is. Taxes, after taxes, we got insurance. So $3,000 might be a good guesstimate for maybe like a $400,000 home, or maybe a $200,000 home, depending on how much coverage is and your deductible. So that's something you'll want to definitely shop around and see if you can get a good rate on that. HOAs, most places in Houston have an HOA. Right now it's set up this isn't a yearly. So, it's going to be affecting about how much you monthly, right? So a $1,200 yearly, about $100 a month. So this is where the fun begins. So now you got all your basic information kind of in there. If you don't know all this stuff, you can obviously search this, find this information out by using, HAR to look for, what the estimated taxes are. But let's say you're shopping for a $400,000 home and you have, about $50,000 you're going to be using as your down payment. So right away the calculator tells you, okay, well you're not getting down to 20%, so then you're going to have some PMI in there because you have If you found this video helpful, like and subscribe today. Your loan to value isn't below 80%. So anytime your loan to value is below 80%, you will have private mortgage insurance. Now that's actually insurance that is covering the company that says, hey, we are going to be taking some risk on you since you're not putting down 20%. So if we have to foreclose on you, we're going to have to take the home back. So you're paying a little bit of extra insurance to the mortgage company that's writing the loan to get coverage for them, just like you have insurance on your house to cover for your in case there's a fire, right? So the same thing, the mortgage company is getting coverage to make sure that they are brought whole in case you default on the loan. So the private mortgage insurance is kind of it's a kind of a two-edged sword here. It allows you to get into a home without having to put 20% down, which is great, but obviously it costs you a little bit of money in that midterm. So just like I don't have enough money to cover my whole house if it burns down, so that's why I pay for the insurance, right? So so anything loan to value under the 80% will then be the loan value is under 80%. And you can actually get your PMI removed too. We just actually had ours removed. We had saw some appreciation in the home. I called the mortgage company up. I said, hey, can you do a new broker's price opinion on our property? And then, get that sent out and said, okay, yeah, you do have enough equity there now that we can take off that private mortgage insurance for you. So, so that's kind of a long story on the private mortgage insurance, but I want to explain kind of what it is. And you see that if you, as your down payment kind of changes, your private mortgage insurance will go up because the loan value is going up, and because your loan to value might change that effect as well too. So obviously there's a lot of factors that go into what private mortgage insurance is going to be, and I didn't put them all into play into this calculator. So this is going to be really kind of a good guesstimate. Obviously your credit score is going to come into play along with the loan to value. So I didn't take into every situation, every factor, but just assuming you kind of have like an average credit score is kind of what this is based off of. So But anyway, so it kind of tells you right up, so okay, well, let's go back to the $25,000 down payment. We have a $375,000 mortgage. Our loan to value, which is pretty close to what most people are putting about 7-8% down right now. Is pretty much average. So most people do have private mortgage insurance. When I purchased our home, we only put down 5%. So we have private mortgage insurance. Like I said, we already got that removed a couple years in because the home's appreciated over the last few years so much that the value is just there, so they don't see it as big as risk. So we can get that removed. Because once you get down to 78% loan to value, automatically it gets removed unless you have an FHA loan, which of those state, you're only putting down 3.5% on an FHA loan, and it stays for the life of the loan. So putting on, that's where you want to talk to a mortgage professional like myself or someone else that says, hey, how much, what's the best bang for my buck here? If I put a little bit more down, put say like 5% down and have private mortgage insurance, I can get that removed maybe in a couple of years, and I don't have to keep paying that PMI for the life of the loan. The only other way to remove it is to refinance. So, but usually it'll get removed automatically if you get down to 78% loan to value. So the mortgage payment here comes out to, so we have all these factored in. You got your mortgage, you got your HOA, your insurance. It's a 6.75% interest rate. HOA is included in there. $3,669.22 all in with PMI. Let's say PMI is a really close estimate, but it could be varying a little bit. So, which is like, okay, that's a lot of money. So how much money do you need to make to be able to kind of like afford that kind of mortgage? So depending on your other debts here, kind of tell you. So if you have other debts, you have a car payment or something like that, you're gonna have to make a little bit more money to be able to afford this mortgage payment, because their mortgage payment is really gonna, it comes down to your DTI ratios. If you have a bunch of other debts, you have a front end and a back end ratio. 36% is kind of where I defaulted the calculator to, because that's kind of like, your back end ratio, your front end ratio can be that DTI ratio. So depending on either one, it might be as low as down to 28% on the front end though. So I kind of left it as a variable that you can play around with. But 36 is a kind of a good guesstimate, as long as you don't have too much other debts. So, kind of tells you quickly like, hey, how much money do I need to make on a yearly basis, with all my total debts here, because it takes my mortgage payment plus my other debts, kind of rounds it up to, a dollar form there, and says, okay, I need to make about $11,000 a month, at a 36% ratio with $350 of the debts. So if I have more debts, obviously I need to make more money, because my DTI ratio is going to be affected, right? So kind of a cool calculator I kind of put together for you. And obviously if you want to get those results emailed to you, just type in your email, they'll send you a copy to your email, and you can kind of, if you want to share that with somebody, maybe your spouse or significant other, and say, hey, like, we're just shopping around and kind of seeing what we could afford in this market. And then obviously you want to actually get pre-qualified before you actually do go shopping, but this might be a good place to start for you, saying, well, how much can I actually afford and a mortgage payment, and how much money do I need to make to kind of like, does that make sense? Because I get that question all the time. It's like, well, I make this much amount of money, what can I afford, right? So this kind of, I wanted to build a calculator to let you know those kind of answers, basing on like, and the real numbers here of like actually putting in like insurance and HOA and costs, because all of those gets factored into your mortgage costs. So, well, I hope you found this video helpful. If you have any questions, you can always reach out to me, Scotty, or my teammate Amber. She's also a realtor here along at the Gifford Group. So if we are the one-stop shop when it comes to your real estate needs. I just want to say, I hope if you found this video helpful, please like and subscribe to our channel. And if you go home shopping in the future, be sure to reach out to us, get pre-qualified for the mortgage first, and then we can help you find a home to get you into. Or if you're getting a move-up buyer, you're looking to move up to your next home, to your next dream home, your forever home, we can help you with that as well too. So